The Indian rupee depreciated over 10% last year against the dollar, clocking its poorest performance since 2013. It was the worst drubbing among Asian currencies as the US Federal Reserve's aggressive monetary policy propelled the greenback. However, since the start of 2023, the Indian rupee has appreciated by around 2%. From the record low level of 83.27 hit in December 2022, the currency has recovered 2.32%. On Friday, it closed at 81.34 versus the US dollar. Analysts primarily attribute the recent gains to decline in the dollar index. Preetham Patnaik of Axis Securities says that hopes of a rate cut were pressuring the dollar index.
The reason for the rally in the rupee has been the very reason why we saw it depreciating when the dollar index was increasing. It's the dollar index which has shaved off some of its gain, and as we speak today, trades at around 102.7 levels. This is primarily because of the fact that the entire markets are factoring that the US Fed is going to reduce the rate of hikes going forward, and there's 75% probability of a 25 basis point hike in the next Fed meet. Additionally, they are also pricing in a fact that come the end of this calendar year, we could see not only the rate hikes stopping altogether, but also some rate cuts. And that has kind of put pressure on the dollar index, and that has benefited the Indian rupee. On the domestic front, FI outflow continues. The economy still needs some breather time, and I don't see RBI coming in and cutting rates anytime soon. And if that happens, it's going to be counterproductive for the rupee. So in the short term, my view is that 81.50 is a great level to go along for dollar, and we could see a rupee depreciating from this point.
Technically, the Indian rupee has been consolidating in a broad range of 80.5 to 83.2 for the last 4 months. The monthly chart indicates that rupee can test 79.8 in the short to medium term.
According to the weekly chart, the pivot point for rupee is at 81.67. A sustained trade below the same could see the Indian currency strengthen versus the dollar to 79.80 odd level. On the other hand, in case rupee trades consistently above 81.67 level, it can depreciate it to 83 mark versus the US dollar. Further, the monthly options data for the USD INR contract expiring on 27 January suggests a likely trading range of 81 to 83.50.
The monthly options data shows that the highest open interest for USD INR contracts is seen at 83.5 call. This is followed by 83 and 82 strike price. Therefore, the rupee may face likely resistance around 82.55 to 82.7. Among puts, the highest open interest is visible at 82 put. This indicates the possibility of a pullback above 82 level in the near term. However, on the downside, the USD INR January contract may find considerable support around 80.5 and 80.8. Meanwhile, on the bourses, rupee-linked sectors mostly outperformed the benchmark indices last week. The BSE Metal Index soared nearly 4%, while the BSE IT Index vaulted 3%. The Healthcare Index closed with a modest gain of 0.2% last week. By comparison, the S&P BSE Sensex ended with a gain of 0.6% and the Nifty 50 added 0.5% during the period. In the broader markets, the BSE Mid-Cap was up 0.01%, while the Small Cap Index was up 0.2%. This week, apart from the rupee movement, FII flows, global cues and Q3 earnings will be in focus. IndusInd Bank, Asian Paints, Hindustan Unilever, HDFC Life, JSW Steel, ICICI Bank, SBI Life, Ultratech Cement and Yes Bank are some of the prominent Nifty 50 companies scheduled to announce results this week.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.